I'm just reading some of this. The judge argues it's going to lessen competition in the luxury handbag market. The FTC out with a statement. A lot of people are kind of poking fun at, saying that these products are something that millions of people rely on throughout their daily lives. What's your take on the deal? I heard you just giggle. What's your take on the deal being blocked, and also the possibility of somehow some other type of deal between these two companies?
Yeah. So I've never been a fan of this deal from the start. And honestly, I think Tapestry should send roses to the FTC for getting them out of this. I mean, you're talking about Coach, which is a brand that has managed to maintain full price selling and not return to discounting. And then you're talking about Kors, which has gone back to discounting and is eventually going to sacrifice operating margins in order to sell stuff at a discount. So the combination here only has one result for Tapestry, which is to drag down Tapestry. That's basically how I look at it here. They are going to appeal, it looks like, but that's part of the merger agreement. The chances of getting this overturned, big question mark. This is a huge distraction for both companies. And also it really sets the tone for M&A in the industry. You have Kroger and Albertsons on the table. And if the FTC is saying that any combinations is bad for the consumer because of pricing implications, I mean, you're really scaring away any potential suitors for some of the smaller, struggling consumer brands here.
All right. I want to move on to some earnings. We had earnings from Deckers. They're the owners of the Hoka brand that seems to really be, kind of growing in popularity. Also, Skechers, another sneaker company. Give us your take on those two earnings reports and just the outlook. And then keep in mind, we're also seeing a turnaround plan at Nike. How big of a challenge are they to Nike's market dominance?
Well, you look at Hoka. So Hoka sales were up 35% this quarter. They reported last night, as you said. And you're looking at, that's barely a $2 billion brand, whereas Nike is a $50 billion brand. Nike is now, their DTC is down double digits, and Hoka is just on fire, taking market share, and still a very small company that is still on fire. And the street's been waiting, when are they going to start discounting? When is the merry-go-round going to stop? And it hasn't. On top of that, Uggs had said they really thought that they would return to some kind of normal environment of discounting. That also hasn't happened. Margins are super strong, and discounted product is down year-over-year. So, nothing to poke holes in here, which is why the stock is up double digits. Same at Skechers. Skechers is growing through volume, not even just pricing like they used to grow. They're selling more units, collaborations with Snoop Dogg and Martha, you name it. Same thing. These two brands are gaining share from Nike, as Nike has really failed to innovate. And that's, the consumer has voted with their wallets for these brands.
Let's talk about the broader luxury sector. We've seen reports from a lot of luxury names, a lot of weakness in China weighing on those stocks. Is that the primary issue when we look at the luxury segment, or is there something else that investors should be aware of?
So, obviously we saw during COVID and after the largest luxury boom we've ever seen. And, the comparisons are very difficult, but of course, China has been the real problem. Kering reported the other day, direct comps down 17%. LVMH even is flattish to down. That's the best in breed. And it's, we have these impossible comparisons. And let's face it, the pricing on luxury has gone up between 30 and 50% over the past few years. Consumers are now looking at these bags saying, do I really need two $5,000 bags per year? And I think the answer they've come to is absolutely not. So a little bit of luxury exhaustion here. And some of these companies are talking about, a recovery in China, pushing it out to 2026 at this point. So I think you've got a long road ahead for luxury brands. Some will struggle more than others, like Burberry and Kering. But I think for everybody, we've entered a new cycle of a down cycle for the business.